Welcome back to Real Estate with King. Today we're tackling a big question that a lot of people have. How can you buy a house if you have no credit or a low income? It might sound impossible, but with the right approach, it's totally achievable. Stick around as I walk you through 7 actionable steps to make homeownership a reality, even without perfect financials. Let's dive in. First off, let's clarify what we mean by no credit versus low credit. Having no credit means you simply haven't established a credit history, while low credit indicates you've had financial challenges in the past. Either way, lenders see you as a higher risk, but there are ways to work around this. And if you've got low income, the key is finding a loan product that matches your situation. One of the best options for buyers with low income or no credit is an FHA loan. These are government-backed loans that have more lenient requirements. With an FHA loan, you can qualify with a low down payment, sometimes as little as 3.5%, and the credit requirements are flexible. You'll need a score of at least 580, but if you don't have credit, some lenders will consider other factors like rent and utility payment history. On top of FHA loans, check out government assistance programs. In the US, programs like USDA loans and VA loans are designed to help buyers with lower incomes or no credit history. If you don't have a credit history, lenders will sometimes look at your alternative credit. This includes things like rent payments, utility bills, and other recurring expenses. If you can show a consistent track record of paying your rent and bills on time, that's a good indicator to lenders that you're financially responsible. Be sure to keep clear records of these payments. Ask your landlord to provide proof of on-time payments if needed. Now let's talk about down payments. While traditional loans often require just 3-5% down, offering a larger down payment, say 10 to 20%, can improve your chances of getting approved, even with no credit or low income. A bigger down payment reduces the lender's risk, which makes them more likely to approve you. So start saving early and consider creative ways to boost your savings, like cutting back on unnecessary expenses or picking up a side gig. If traditional financing isn't working for you, explore seller financing. This is when the seller of the home essentially becomes your lender. You'll agree on a down payment and make monthly payments directly to them instead of a bank. While this option isn't as common, it can be a great alternative for buyers with low credit or income, especially if you can't qualify for a traditional mortgage. Another option is to find a cosigner. A cosigner with a strong credit history can help you get approved by adding their financial strength to your application. This is a big responsibility for them, as they'll be on the hook for payments if you fall behind, so make sure both of you are on the same page and have a clear plan. Have you heard of lease-to-own programs? This is where you rent a home with the option to buy it later. Part of your rent payments may go toward the future purchase of the home, allowing you to build up a down payment over time while living in the property. This can be a great way to work toward homeownership if you don't qualify for a mortgage yet, but still want to lock in a property. Once you've explored these options, the next step is to get pre-approved for a mortgage. This process will give you an idea of how much house you can afford and what loan programs are available to you. Even if your credit and income aren't perfect, lenders will consider other factors like your employment history, down payment size, and payment history. Don't settle for the first lender you find. Shop around for a mortgage lender that specializes in working with buyers who have no credit or low income. Different lenders have different criteria, and some may be more flexible than others. Credit unions, for example, are often more willing to work with first-time buyers in this situation. So, to recap, if you have no credit or low income, you can still buy a house. Look into FHA loans, build alternative credit, save for a bigger down payment, explore seller financing, and consider lease-to-own programs. Getting pre-approved and shopping around for the right lender are also key steps. Remember, buying a home is a journey, but with persistence and the right strategy, it's possible for everyone. If you found this video helpful, be sure to like, subscribe, and hit the notification bell so you don't miss any future tips on your path to homeownership. Have any questions? Drop them in the comments below, and I'll be happy to help. See you next video!